T-minus 20 seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0.
Isn't it good to know that no matter where you are, you're covered? Covered by a company owned by Vincentians that understands your unique insurance needs. At Metrosint General Insurance Company, we've invested 50 years of service to guarantee that you have the peace of mind that you deserve. When it comes to motor vehicle, property, employer's liability, business insurance, and much more, we've got you covered. Our professional and friendly staff understands your needs and ensures you understand your options. Metrosint General Insurance Company.
Good evening, viewers, and welcome to another edition of Let's Get Down to Business. Let's Get Down to Business is a collaboration between IKTV and the Chamber of Industry and Commerce. We have a distinguished panel on the program this evening, and our topic up for discussion is access to finance and finance education for micro, small, and medium enterprises. So let me get straight into the introductions. Dr. Winsome Leslie is one of our panelists. She is the founder and CEO of Dev Solutions, Inc. Later on in the program, she's going to tell you about that. We have Mrs. Carmen Gomez Trigg, and she's the CEO of ECPCGC, which is a long acronym, and it really means Eastern Caribbean Partial Guarantee Credit Guarantee Corporation. And I hope I got that right, Carmen. And no stranger to you is Mr. Lennox Bowman. Lennox is partially retired, I would say. He's not going to be allowed to slip totally into retirement. But immediate past manager of GECU, and also Lennox is a chartered banker. Very knowledgeable individual. So panelists, welcome. Pleasure to have you.
Thank you.
Thank you so much.
Thank you. Good. I want to start the program by just sort of setting the base for what, when we talk about a MSME, a micro, small, medium enterprise, what are we talking about really? I'm gonna throw that out to Winsome, Dr. Leslie first and foremost, to sort of give us an idea of what are we talking about when we say MSME.
Well, first of all, let me just say that there's no standard definition of micro, small, and medium-sized businesses in the Caribbean. The definition varies from country to country. Some say that any company with less than 10 employees would be considered micro. Some say 5. So it's a very fluid kind of situation. So I think for purposes of this discussion, we should just say any firm less than 10 employees would be considered micro. Above that would be considered small.
And I think prior to us coming live on air, Carmen, you were saying that your organization, your focus really is on entities that are below 50 employees. So are we going to just say that below 50 employees are what we would consider within the group of MSMEs? Yeah,
I think that's a fair assessment. Yes, anything, because you see we are looking at a particular catchment area, and I think the under 50 would capture the micro, the small, the medium.
Excellent. Why are they important? What is the reason for having so much focus on this sector of the business community? Why? I mean, I don't know who wants to jump in here. Lennox, perhaps you can kick off that part of the discussion. Why are we looking with such importance on MSMEs?
Well, I think the statistics shows, Tony, that MSMEs really contribute significantly to the productivity in the country. And they not only just produce on themselves, but they also feed the value chain where a lot of them produce for the what we term or more the bigger companies. And without them in economies like ours, where there's so much informality, and we refer to so many of them as the informal sector, without them, it's difficult to see us moving along the path to self-sustainability and moving along the path to subsidizing your imports. And it is very difficult for people in a very, what I would consider to be a very, or I don't want to say disorganized, but an informal setting exists without these micro enterprises.
Right. Before Dr. Leslie and Carmen jumps in, basically I have some global stats, and perhaps y'all could tell me if these align with what we see in the Caribbean here. These businesses account for 90% of businesses globally. That's a stat that I got from the SME Finance Forum. They also account for half or more of a country's GDP. And in terms of employment, 52 to two-thirds of all employment is created by this sector, the MSME sector. So I don't know if this aligns, Dr. Leslie, Carmen, if this aligns with the regional reality. Dr. Leslie?
I think certainly it does. I mean, obviously it varies from country to country. But yes, I think it's known that the MSME sector is vital to economic development and to economic growth. And as Lennox said earlier, the employment benefits that accrue to this segment are significant. So unless we pay due attention to MSME and MSME development, there is certainly very little prospect of the Caribbean, particularly at this juncture, moving beyond a COVID situation into a new development and growth scenario.
Lennox mentioned the informal nature in which they operate as well, meaning that they are really not, a lot of them are not registered entities. In St. Vincent, I happen to know that all businesses that are registered with the National Insurance Services here, just around 2,400. Now, Lennox, I'm sure that's not the entire business population of St. Vincent and the Grenadines. So we can see an issue here. Carmen, I don't know if you want to comment on that lack of businesses coming into the formal sector and what proportion of them actually operates within the informal sector, and give us a regional perspective.
Okay, so I'm talking from the standpoint of the Eastern Caribbean, which is where our program is based. We have been finding that the demand that we thought was there doesn't seem to be there. And in talking with the bankers, they have told us that the people who are coming are not prepared. They don't have their books ready. They are not registered. There are issues in terms of their information and so on. I think in the case of Dominica, one of the bankers quoted, she said over 45%. In St. Lucia, we got another high percentage. So what it means for us is that a program which has been designed to alleviate the access to finance issues of the MSME sector must now take a deeper dive and go down into getting the MSMEs ready for banking, ready for loans, and ready for guarantees. And the informality of the sector negates against them getting access to finance.
Right. So I understand as your internet is giving you some issues there. Winsome, the fact of people businesses not is that, and we're going to go on to the constraints that they have in accessing finance. Maybe we could start out there.
Could you repeat a little bit? You broke up a little bit. Would you
okay, we're talking about constraints. Right, constraints, and this is constraints to these businesses accessing finance. And I wanted to make the linkage of how much of that is due to the fact that they are in the informal sector. They're not registered.
I think a lot of it is because they are not registered. I think, first of all, just to mention, I think the Inter-American Development Bank released a study last year, I believe, that looked at informality in the Caribbean. And it showed that, for example, in Jamaica, 45% of firms are informal. It was about 40% in Trinidad, 33% in Barbados. These are high numbers. So we have to ask ourselves, why is this the case? Now, a lot of the firms that are in the informal sector are what we call necessity-based entrepreneurs, meaning they're just doing a thing on the side, or this is a way of making some money to send kids to school.
What's the term you use? What's the term you use?
Necessity-based, as opposed to opportunity-based. Opportunity-based entrepreneurs means that you see an opportunity in the market and you take advantage of it. Necessity-based means that you basically need to provide for your family, and so you go into either a side hustle or an informal something to feed your family and put food on the table. So we have to ask ourselves, why are these companies staying in the informal sector? And a lot of it has to do with, one, the whole tax regime, the fact that they don't feel that they want to be taxed, that the perception that it's burdensome to pay taxes, it's burdensome to register, even though a lot of work has been done in the region around the business climate and streamlining processes for starting a business. Firms are still of the opinion that it's difficult. So rather than going to that step, they stay informal. Now, this proved to be a huge disadvantage in COVID, because you recall when COVID really burst on the scene last March, governments in the region rallied around and gave assistance to formal firms. The informal firms were basically left out in the cold, and of course there was a lot of pressure to do something for these firms. So finally, belatedly, governments provided a package of assistance to informal firms. But just to say that this shows that unless you're formalized, you close yourself off from a lot of opportunities. Even in a situation of a crisis, there is very little recourse for you in terms of accessing formalized funding, be they from the government or from financial institutions. So it is a huge disadvantage to be informal. Secondly, I think folks who are in the informal sector tend to be to have less formal training. So, they do low wage kinds of activities. So informality also perpetuates poverty. It perpetuates wage inequalities between formal firms and informal firms. And you really an informal firm has severe limits on growth. So all around, it sort of becomes a vicious cycle, rather, where you are informal, you're just getting by, you can't grow your company to increase your income. So you're really plateauing at a very low level, a very low income level. So the economic fortunes for your family is very limited. And unless you can somehow, I'm sorry, go ahead.
No, you go ahead, you finish.
No. So unless you can break that cycle, meaning get formalized training, formalize your company or your enterprise, and move into a more structured arrangement, there are limits to what you can do economically.
I was going to say that, in fact, the World Bank, and I'm reading from a excerpt here that the World Bank recently released a book which deals with this very topic of informality, and they say it has implications for a durable economy, recovery, and long-term development. Okay, it finds that pervasive informality is associated with significant weaker economic outcomes, which you have identified, including lower government resources to combat recession, which is what you mentioned, lower per capita incomes, greater poverty, less financial development, and weaker investment and productivity. So, it is coming to sharp focus here. And we are talking about access to finance, and we've also identified that as one of the constraints to MSMEs accessing finance. Carmen, if I can go to you with the Partial Credit Guarantee Corporation. What is the objective of your entity, and what are you trying to surmount in terms of some of the other constraints that businesses may have in accessing finance?
Okay, so we have a mandate that is designed to do several things. The first one is to provide guarantees to the banks on behalf of the borrowers. The second one is to build capacity in the borrowers themselves, because we feel that they need the capacity building. And the third one is to build capacity in the lending officers themselves. So let me just go into a little bit more detail. In I think 2015, 2016, around that time, the World Bank and ECCB would have conducted some studies to determine why the MSMEs were not being successful in getting loans and so on. And they came up with the fact that, there was a lack of collateral. Some of them wanted the loans, but they didn't have enough collateral to get the loans that they needed and so on. So they decided, when they looked around, they decided that this guarantee program would have been the best solution for that particular problem. Enter the team, the directors and so on, and we opened our doors in 2020 with these three mandates that I'm talking about. At first, we thought that once we had put the guarantee program in place, we had signed the various banks and so on, that the demand would be there, that the MSMEs would come knocking down the doors of the banks to get guarantees. That has not happened because we launched last year in the midst of COVID. So then we had a classic product. We went back to the drawing board and we said, let's do something that is more COVID specific. And we brought out two new products which are designed for MSMEs who are encountering some problems because of COVID and so on. And we thought, okay, yeah, this is it. We have it now. Let's go out. We went out, and I've been talking to the bankers, and they're telling me, you know what, the people are coming, but they don't have the records. They're not registered. They don't understand how to do their businesses and so on. So right now, we are in the process of going a little bit further and dealing with another part of our mandate, which we thought we would have dealt with a little further down the road. We have now to accelerate that and to do training programs via the chambers in the region, via the business support organizations and so on, to sensitize the MSME public of what their needs are, how to get ready to get a successful loan.
This is the finance education piece, yeah, that you're more or less talking about.
Yes.
Or part of it. And I know Dr. Leslie that's the core of what she does, finance education. But before I go back to Dr. Leslie, Lennox, at GECU, you are a finance institution, and I'm still speaking, addressing you as if you are still the manager there. But your experience in terms of the loans that you were able to give to business enterprises, what were some of the challenges in getting them ready to qualify for getting finance?
Well, Tony, we recognize on this program already the importance of the informal sector and what it means. And I think not just from GECU, but I think credit union region-wide have been the institution that has been dealing more with this informal sector than anything else. And some of the issues we have were just like all the other issues.
Is it because you are less risk averse? I'm sorry to sorry to interrupt you, Lennox, but I just want to get the point. Is it because you feel as a credit union you are less bounded by regulations that may affect the banks, or you're just less risk averse? Or is it that your decisions are less bureaucratic in the process of arriving at a decision whether to lend or not?
I think one of the issues we look at the credit union, and especially in small communities that like ours in the Eastern Caribbean, is your local knowledge on the ground and your community engagement. And credit unions have a history of very strong community engagement. So we are always out there, we're always in the communities and so on. So we can maybe we are disposed, let me put it this way, to taking greater risk with respect to our members. But all the issues of that we can't get accounts from them. As a matter of fact, you can't even get accounts from big companies these days, smaller one. They don't pay the NIS. You have to work with them. Taxes, you have to work with them. But it's all an education process, and it's not only an education process for the businesses, for the small businesses. It's an education issue straight across the board. So all the stakeholders involved need to be educated. The government need to be educated. You have to have a national policy in terms of how we deal with small business. I think it's Carmen who spoke before, or if this is Winsome, about a tax regime that is attractive and would make people come forward and they think that they can benefit. So you have the persons offering advice to small businesses need to get there, need to get involved. The marketing people need to get involved, because what we found with lending to small businesses is that the most important thing was the markets. How it makes no sense to lend to a small business convincingly. You should be convinced to lend if you don't feel that the goods and services was produced are going to be sold.
So the market is a big factor. The market underpins basically
absolutely a big factor, Tony. And even now we are seeing, and I think Pam, Winsome and I had a short discussion on this already. But what you have now with COVID, and in our case particularly the volcano, is a kind of an emergency with respect to small businesses right now. The pandemic just showed us how vulnerable we are. We had liquidity issues. Our technology were never able to support the businesses in any particular kind of way. And we're now looking for not just short-term solutions, but long-term built-in resiliency in these businesses. But it will take everybody to get on board. It will take education of everybody. There is a great imbalance, I find, with small businesses and say the lending institutions. Because the lending institutions, well, maybe supposedly have a lot more knowledge and information about the business that they're into. So when small businesses come to them, they are already at day one at an advantage. So the issue of accessing we need to look at broadly at how we assess the situations, how we systematically analyze the portfolio, all the liquidity, the quality of the operations, the marketing capacity. And I see Winsome smiling because I know she might be going down that road. And of course, we need to develop a plan which will take into consideration all the risk management areas and then implement the plan. So I think that those are some of the critical things which are now needed, and Winsome might clearly want to jump in here.
Before Winston comes in, and we're leading up to the break anyway, I just wanted to start of put this in a capsule here when we're talking about constraints, okay? And this I'm again quoting from the SME Finance Forum here, which is fully credit constrained firms. They define them as those that find it challenging to obtain credit. These are firms that have no source of external financing. They typically fall into two categories: those that applied for a loan and were rejected, and those that were discouraged from applying, either because of unfavorable terms, and we haven't touched that yet, unfavorable terms and conditions, or because they did not think the application would be approved. So there is that hesitancy to go forward because they feel as if you're defeated even before you go through the door, right? The terms and conditions that discourage firms include complex application procedures. We haven't touched that yet. Unfavorable interest rates, high collateral requirements, and insufficient loan size and maturity. So those are that's in a capsule are some factors that I want us to lead into just before the break. And when we come back from the break, we will also expand a little further on them. So let's look at high collateral requirements. Let's kick off with that. And I know that's why the Partial Credit Guarantee Corporation is in existence. And you're trying to address exactly that, Carmen.
Yes, actually, yes. I was doing some research on that, and I realized, and this is from 2014, but it has continued to date, that the collateral that is requested by the banks are over, in all instances, with the exception of, I think, Guyana and Suriname, over 150% of the loan value. So think of you, a little MSME. Let's say you were able to get in the door with a bank. You have some kind of history or something, and you want to get 100,000, and they tell you, well, look, your collateral have to be worth about 200,000. How do you manage that? And this is where the ECPCGC comes in to be able to say to the bank, okay, we can provide you with 75 to 80% of that collateral. If the guy has 20 to 25, okay, you can take him. If he doesn't have all of that, but he has the capacity to go up to that amount, 20 to 25% within the lifetime of the loan, we will take him. So that's where we
are. Why are banks, I don't want you to get them too far down the road. Why are banks requiring 150% percent of the value of the loan as collateral? That seems an extraordinarily high figure to me. Why? What is the legacy of that? How did that come about? Yeah. Mm-hmm.
Risk aversion.
Exactly.
Does that have something to do with the market? Is it that these banks have been bitten? Is it that the legacy rides on the fact that they've been burnt? Because I must imagine that the banks want to do business. So why this risk aversion?
You see, Tony, I think we are heading in a direction now where we have to be looking at reform collateral lending in terms of the banking sector, where banks now, and let me not say banks, lending institutions now, they suffer from, in some cases, not all, an inability to assess unsecured lending. And this inability to assess unsecured lending is further buttressed in they're not able to provide the kind of support, security required. If it's not a house or a car or something like that, they're not willing to take it. So you don't have any assessment being done. Say, okay, let me look at the receivables and see if I can assign those receivables, or let me look at some other shuttle things, movable things that they can, because right. But critical to this, in my opinion, is the fact that markets, if banks, lending institutions lend to the small business, only comfortable lending if they think the products are going to be sold. And if there's a
Bit of
real
a chicken and
market,
egg situation there, though, Lennox. I have to tell you because it is being modeled on traditional, um, you know, market activity, and whereas we are trying to forge um, things that are not traditional, the creative industries, all these things that are not we don't have a template for. If the banks are going to try to guess how the market is going to respond to that, and therefore stymie the growth by having unfavorable lending conditions, then we've got a problem. But I have to leave it there and go to the break. So when we come back, we will pick up further on the discussion. Let's go to the break.
Isn't it good to know that no matter where you are, you're covered? Covered by a company owned by Vincentians that understands your unique insurance needs. At Metrosint General Insurance Company, we've invested 50 years of service to guarantee that you have the peace of mind that you deserve. When it comes to motor vehicle, property, employer's liability, business insurance, and much more, we've got you covered. Our professional and friendly staff understands your needs and ensures you understand your options. Metrosint General Insurance Company.
Welcome back. This evening, we are discussing on Let's Get Down to Business. We're discussing the topic access to finance and finance education for micro, small, medium enterprises. On the panel, I have Dr. Winston Leslie, and she is the CEO and founder of Dev Solutions, Inc. We have with us Carmen Gomez Trigg. She is the CEO of the recently formed East Caribbean Partial Credit Guarantee Corporation. And I got that one right this time, Carmen. And we have Lennox Bowman, known to us as the immediate past CEO of GECU, and a man who's very active in the finance sector. He is a chartered banker. We've got some comments in the stream that people are following us on. Earl Bennett is saying here, Lennox, that you're making some very good points. So I thought I'll give you that feedback. Randall Roberts says he thinks aversion is definitely, risk aversion is definitely a factor with the banks. They seem to need a safety net. I want to encourage other people who are following on the YouTube and Facebook platform to participate, make your comments, and ask questions. So, Lennox, when we left it, we were talking about the institutions maybe trying to second guess the market and how the market would respond to a particular business proposition. How, and I'm going to throw this question home to all of you, how are we going to get around the that second guessing of the market as we get into new areas, uncharted territory, if you want? We hear, certainly here in St. Vincent, we hear one of the strategies or one of the initiatives of the current government is to go and exploit the blue economy, or pelagic resources. Within that, you've got to have operators who are going to need finance, but these are not traditional sources of activity. So, are they going to be turned down by banks to get financing for such activity? And if they are, then how are we going to develop this sector of the economy? So I'm going to throw that out.
Tony, I really do feel that the first thing the lending institutions, and I don't want to say banks, so the lending institutions, first thing I think they need to do is to make sure that they have well-designed programs in lending. I still don't think that enough attention is placed on designing programs which meet their need, yes, but meets the need of the client as well as involving some of the other stakeholders, the people involved in marketing, the people involved in business training and things like that. So I want to make that point. Success to me will also have to depend on how well trained the bank employees are, the people who are assessing these credits, for the want of a better word. And small business needs a coordinated approach. It needs government, it needs the small businesses, it needs the banks, it needs the standards and quality, it needs all these people to be working together to give confidence. For example, if I'm a person assessing a loan at a bank, and the small business person coming to me, or the small company comes to me with a good proposal that probably say went through a small business development advisory service or something, it may give me a little bit more confidence when I'm relating up, trying to come to a decision. That process, coupled with some information on, some hopeful information on markets or so on, can give. But we need to have this education straight across. I know we haven't touched on
So the business planning process is, I guess, where you're going. The business planning process is important. People are applying for loans. You come in with a proposal that says you want to tap into some, economic activity, some business activity rather, that is not as predictable as what the banks would like. The business plan process is going to be very important, I suppose, because the business plan has to articulate fairly convincingly
absolutely
the measure of success that enterprise is likely to have. Karen, let me ask you, because you've got this credit guarantee corporation, but I don't think it's going to make an impact if it just simply mirrors the bank in their outlook as to who really qualifies for a loan. In other words, if all you're simply going to do is say, okay, fine, the only constraint here with this person is collateral, or some simple thing like that, and then you're simply just going to fill that gap, then we're not, in my mind, we're not really addressing the fulsomeness of the problem. Would you agree? And is it that the PCGC is going to take more of an in-depth look in terms of how people qualify, how businesses qualify for loans?
Certainly, because we are of the view that the 40-page or 50-page business plan doesn't hack it. We have the view that the entrepreneur must be able to vocalize and be able to tell somebody about its vision, his competition, his market, his everything. And for us to reach that juncture, we have to train all of our MSMEs. So we are working with the chambers. We met at the chambers a couple of weeks ago. We had a chamber launch, the ECCU Chambers launch an event first last week. So we want to work with the chambers and the business support organizations to get the MSMEs to a certain level. That's one bit of the capacity building. We do feel as well that the bankers need to be trained, and I'm echoing what Mr. Bowman is saying. So we are going to be rolling out some MSME training sessions for the bankers themselves, because we feel that they are not totally on board with all that happens in the life or the business of an MSME. Some of them are treating it as a small corporate, which it is not. And the relationship building is so critical. So we are also going to be rolling out some series of training sessions in MSME assessment for the bankers as well. So we're taking a bit of a holistic approach. It's taken a little while. We've just started, and it's just a staff of 4. We are down to 3 right now. But these are the plans, and definitely by the next couple of quarters, we would have rolled out some training for MSMEs and training for the bankers.
Dr. Leslie, Dev Solutions. Okay, you go ahead and add your piece, and I'm going to ask you.
No, I was just going to piggyback on that, because one of the things that I wanted to say was that the business support organizations themselves need training.
Absolutely.
Awareness about the different financial products. And I'm going to talk a little bit about alternative financing mechanisms in a minute, but certainly to articulate and to be able to also train their entrepreneurs, not to just mindfully, mechanically do a business plan, but to be able to articulate the business model. So the business model canvas should be the go-to for every business support organization training an entrepreneur. So that when you go into the bank, yes, you can give the business plan, which they want, but you can give the elevator pitch about what you're doing, who's your market, et cetera, et cetera, et cetera. And that, to me, is lacking. This should be mainstreamed across the region. In fact, I would think that organizations such as the Caribbean Development Bank might want to look at how to mainstream certain basic training programs across the business support organizations. They had formed, I think, through Jamaica, through the DBJ in Jamaica, had formed, I think, Caribbean, a regional organization of business support organizations. I'm not sure whether that's still vibrant, but certainly that could be a vehicle, if it still exists, to do some of this basic training. Also, in terms of the bankers and training them, I think it'll be a challenge for them. Coming back to your point, Tony, talking about non-traditional sectors such as cultural industries, they don't have the tools right now to evaluate these kinds of projects. So there has to be also training around that. And then we also have to realize that banking and banking finance and loans, commercial loans, are not going to necessarily cut it. That's good, but we need to look at alternative financing mechanisms as well.
So let's jump straight into that.
Such as factoring. We're talking about factoring. You mentioned it earlier, Tony, where you're basically being paid upfront on your purchase orders by a company, which pays you up to 80 or 90% of the value. And then when they get paid by your client, you get the balance less their fee. And then there's also purchase order financing as well, which basically is the same thing, but basically your suppliers are being paid so you can get product to manufacture and so forth. There are also other things such as IP commercialization that gets into the whole notion of using movable assets, right? Which is important. There's some steps being made now in the region around that. I know in Jamaica, for example, there's a collateral registry, I think in St. Lucia as well. There's some efforts by the ECCB to develop one in the Eastern Caribbean. This is vitally important, because if you're going to push areas like cultural industries, where IP is valuable and very important, we need to be able to monetize. So
IP is intellectual property we're talking about.
Intellectual property, yes. We need to be able to monetize that. So not only do you have to also train around IP, but also put a structure in place to value these IP assets, figure out commercialization, train evaluators and so on, and also eventually develop a secondary market so that bankers, when they're trained to accept these kinds of assets, they can potentially dispose of the assets on the secondary market. So this is something that should be really on the table across the region, because I think this is a way of supplementing what banks can offer. There's also crowdfunding as well.
Go ahead.
There's also crowdfunding as well, which has been used successfully here in the US, but also could be a potential for companies, even though it's used mostly for charity organizations and so on, but it could apply as well to certain startups and early stage companies. So these are things that we ought to be looking at seriously in the region to supplement what banks and microfinance institutions can offer.
One of the issues I see with factoring is I call it a sort of cultural business culture here that big companies, I'm not going to call any names really, but big companies do exactly the opposite to facilitate what is necessary to facilitate factoring. You've got this thing where a small business does provide a service, goods, or what have you, and we're talking about payment up front. That, in a lot of cases, is the opposite. People take a long time to get paid. And so it ties up whatever little cash flow that small entity has. And I think there's some big companies that exploit the market conditions because, they're the ones that require the service. People go to them because they have the confidence that they will get paid, but it's when they get paid. So Lennox, I don't know how we're going to break that.
I don't know. It really is. It really is education, and I talk about the imbalance in education, but it really is about education. Look at the issue with the borrowers. When you are a small business operator, you have certain needs. You need to make sure you acquire the skill. You also need to acquire the acumen, and you need to be able to identify opportunities for growing business. One of the things people will say to me is that, listen, I can't even, when I say, well, what about your accounts? Are you trying to get somebody to do your account? They don't even understand why it is necessary for them to prepare accounts. And it takes me back to a point that Winsome made at some other time I was speaking to her. The levels at which you pitch the education and training will vary depend on the user ability to receive it and make good of it. So I find sometimes I have to sit down and spend half an hour just trying to get people to understand why it is important for you to do your accounts. That is accounting training, but that has nothing to do with preparing the account itself.
No, this is financial education, basic financial education, where you separate your personal accounts from your business accounts. And a lot of folks don't understand the importance of that. But this is really, business management 101. I mean, you can't hope to succeed in a business, no matter how small, if you can't just adopt that basic principle. So I think this is an education this is a training that has to take place, that has to be weaved into the capacity building efforts across the region. But also, I think the loan officers themselves, and here I'm thinking particularly of microfinance institutions and credit unions, they need to be also trained about how to talk to their clients about these basic things, right? So again, it comes back to training.
We just have to see microfinancing and small business for the important role that it plays. And I think that is something that across every level of the society and across every stakeholder, we have to have an appreciation for how important these little people are in terms of developing our multi-island Caribbean.
If I might say something too.
Go ahead.
No, if I might say something, I think we've been talking a lot about what I would call necessity-based entrepreneurship. And I think
I was just about to bring that point up.
If the Caribbean is going to really leap forward, we have to look at cultivating opportunity-based entrepreneurship, right? Having said so,
that's the point I was going to bring up when I came in just now there, because at the front end of the program, you did identify the necessity-based entrepreneurial activity versus the opportunity-based. And I think a lot of the discipline that you guys identified is the basic thing of separating the business accounts from your personal finances. You're not going to find that in the enterprises that are necessity-based enterprises. They're not. This is almost, if not the level of subsistence living. So I think it's a bit ambitious for us to think that we are going to get that level of success, certainly at the enterprises that are necessity based. And I don't know if you agree with that.
Well, some businesses who are significantly large are still informal. So I wouldn't be so negative about the prospects. I think sure there's a huge cadre of those kinds of firms that probably won't buy into that, but I think it's worth the effort to try and move the needle, so to speak.
Yes, I agree with you. I was just making the point that the ones who are not looking at exploiting market opportunities, but are just basically selling vegetables because they need something to do. Okay, whether the market is bearing it or not, they just go on a wing on a prayer, right? That's not the type of enterprise that's going to be separating business expenses from things. So I agree. There are people within the informal sector that need to first come into the formal sector and also get the kind of business discipline that's required.
Yeah, but I would also like to see, let me just put it this way. There's no shortage of innovation in the region, right? And I would just like to see the firms that are now emerging with new ideas and so on, and certainly to have more of an opportunity, not only for capacity building, but also for access to finance. And also to encourage young people who have really great ideas in the region to actually launch businesses and to help them to be sustainable, right? One of the things that's emerging in the region that's quite interesting, coming out of Jamaica primarily, but sort of bubbling into other countries as well, is the whole notion of equity investment and specifically angel investment. As you probably know, First Angel in Jamaica is now quite vibrant. There are about 23 members. There are some members now that have joined the group from the Eastern Caribbean. I'd really like to see more of that kind of financing available to stimulate and encourage innovation in the region. And I'd like to see certainly angel investment coming from the diaspora as well, because I think it's easy to sort of, relate to diaspora around remittances and so on. But I think increasingly the region needs to actually reach out and effectively tap into not only the expertise in the diaspora around access to finance, but also actual investment coming from
Carmen
diaspora.
and Lennox, how are we going to pull all of that together? How are we going to shift the culture of the people in the diaspora into and the remittances are very important, but now pooling the remittances or getting together and becoming angel investors so that the remittances now go to a productive exercise, a productive activity, which then generates economic activity and self-reliance, as opposed to the handout that comes through MoneyGram and Western Union.
Really,
and
as Winston said, there's no shortage of innovation and
I'm all ears, Lennox.
ideas. There's no shortage, and these businesses, these young people, these entrepreneurs, they are very creative, and they are the real engine of development, so to speak. And when we look at the amount of stuff, I don't think there's a country in the Caribbean which is not a debtor country, meaning that they import more than they export. And if we are to get to an import substitution level, which looks like what we should be in the region, we have to make sure that we get all the issues that we talk about, the crowd financing and the equity financing and the venture capital and the angel financing and so on. Great. But you know one thing that going counter to these things is we have to have data. They are very market driven. They have you need if I'm going to be an angel and I'm going to come in, I need some real you need to provide me with some good convincing information on what I am getting into. Same for equity financing, because in equity financing I could end up not losing my money. It depends. And for venture capital, the same. But we need to be our communication, our information, our knowledge-based systems and things too need to develop a little better than they are right now.
Well, I think the idea is to develop.
Well, we're touching on a lot of areas that are themselves program topics.
Right. I think the idea is to nurture ideas that are scalable, right? And have a market not only within the country in question, but in the region, perhaps internationally as well. Because if an investor is convinced that the business model is a good one, and there's a market, and there's a very significant potential market for this product or service, they'll want to invest. But I think folks in the diaspora also want to be able to see a vision of the region, right? Or a vision of their country. So it means being able to articulate very clearly where the country is going and where the diaspora can fit into that. What's their value added in that strategic plan, if you will, for the country.
Because so you would say that this is the function of the government then? This is the function of any government?
Absolutely.
Yeah.
Absolutely. I mean, there has to be a relationship between government and private sector as partners in all of this. I mean, I take a very ecosystem approach to entrepreneurship and access to finance, where the various stakeholders each have their role to play, right? And there has to be a linkage between the various pieces of this. The financial institutions, the government that provides policy, so say an MSME policy, for example, or a tax regime that supports MSMEs, the business support organizations that have vibrant programs and capacity building for entrepreneurs, private sector networks, which are facilitated by the chambers of commerce in the region, for example. These are things that are important. Innovation, R&D, all of these things fit together in a holistic way to support MSMEs as they go through.
Let me just go back to Carmen and find out the range or the reach of the partial credit guarantee corporation. How much money are you putting into this thing initially, Carmen? How much? I'm talking in quantitative language here now. What are you putting up to underwrite or to guarantee these loans? Finite sum.
We have a total capital of 12 million US dollars. That's the total of which we've put aside 2 million US for the current expenditures over a number of years, and the 10 million US is what we're going to use to back the guarantees.
The life span of your corporation. Are you expected when that 10 million, or is it a sort of revolving type operation? So when that is returned back to the system, it goes back out again. Is that the model?
Absolutely. Yeah. Yes, that's the model. And so that's why with the riskier products that we launched just a couple of months ago, we are going to be assessing that after a year, because we want to make sure that the money comes back and it keeps on revolving and revolving, so that there's a larger percentage of people who have access to that fund.
Let's touch on credit bureaus. What is the importance of a credit bureau, and why is it taking so long to have a established credit bureau that lenders can go to and pull the sort of data that is required for them to have a sense of security? Lennox, I know you were part of a conversation a couple of years ago when the Eastern Caribbean Central Bank was doing a bit of legislation to facilitate a credit bureau operation in the currency union. Where are we with that? Do you know?
Well, I think maybe Carmen might be able to answer that better than I can, that aspect of
Okay.
it. But I know the act was actually passed in St. Vincent, and I think they had gotten to a stage where I think they had agreed to one particular credit bureau in the region. I'm not too sure, but Carmen might be able to give a bit more on that.
Yes, Carmen, where are we with this?
Well, it's in the hands of one of the directors at the Eastern Caribbean Central Bank. I know it's coming together. They got some funding. The harmonization of the legislation part, that took some time to get done. But I know that part is done, and the operationalization is actually happening now.
Yeah, and Tony, but to answer the other part of your question, the credit bureau.
I'm probably going to ask you to say that answer for when we come back.
Okay, good.
From the break. We're right on the time for the break, so save your thoughts, and as soon as we come back from the break, we would bring you back in, Lennox. So let's go to a break.
Isn't it good to know that no matter where you are, you're covered by a company owned by
technical operator
that understands your unique insurance needs. At Metrosint General Insurance Company, we've invested 50 years of service to guarantee that you have the peace of mind that you deserve. When it comes to motor vehicle, property, employer's liability, business insurance, and much more, we've got you covered. Our professional and friendly staff understands your needs and ensures you understand your options. Metrosint General Insurance Company.
That the internet seems to be certainly on my end not the most reliable tonight, and that's impacting some of the quality issues with the program. So I'm asking the viewers to just bear with us. We're all remote from the studio. We've got our technical operator in studio, Morales Harry. We thank him very much for his patience. Lennox, when we went to the break, you're talking about you're going to share some thoughts on the credit bureau question.
Yeah. Briefly, you ask about the use and the value of them and so on. And
correct.
Credit bureaus are valuable for both lending institution to help them to assess risk better, as well as it is for the borrower who can be protected against any claim that his risk is not adequate, if indeed it is adequate. So it protects us against unnecessary credit risk exposure. It also generally will improve the efficiency and credit evaluation process. And usually better risk assessment can and sometimes do quite often lead to lower interest rates. So it's really a consumer protection tool, and also for the lending institution as well.
Carmen, I am suspecting very much that the existence of a credit bureau within the currency union, certainly the Eastern Caribbean currency union, is going to make the job of the partial credit guarantee corporation a lot simpler.
Yes, that is correct. That is correct. Because we do have free movement of people across the region. And sometimes somebody has a loan in, say, Dominica, now they're now living in St. Kitts. And if we do have the regional credit bureau, then we can in fact be able to detect something like that very, very early in the game. That's one of the challenges that the banks face right now. I know that they have their means of getting the information, but I don't think it is foolproof. And in this era of movement, natural disasters, etc., we think that the credit bureau is critical.
But also, I think you can also verify whether a borrower or potential borrower is over leveraged, whether they have more than one loan, because they could say something on the application and then the reality is something different. So that is also a very important aspect.
Well, it's certainly going to take quite a bit of discipline to get that credit bureau functioning properly, because you really need to capture all the person's information, and there's got to be some information exchange as well that takes place there. And some businesses may see that as competitive intelligence, and so I can see the challenges in getting something like that up and running, but clearly it's a tool that's used in developed economies.
Yeah, well, there are other countries in the Caribbean with credit bureaus now.
Yeah.
So that's it'd be interesting to learn from their experience and see how they're handling the privacy issues.
Let's look at the high rate of interest, and I want an explanation for that. Is it that because banks are billing in finance institutions that charge high rates of interest? Is it that they're billing their risk? So you got 20 people borrowing, and you think 5 are not going to come clean. 5 are not going to repay. So I've got to make that money from the other 15. Is that I'm simplifying it like that? Is that the reason it's driving high interest rates?
Well, interest rates should be a reflection of risk, and to the extent that we just spoke about things like credit bureau should be able to bring risk down. But to be fair to the banks and the lending institution, the cost of governance these days with all your AML, CFT.
I was going to mention that.
About that as well. Yeah. We want to get that into the conversation.
Yeah. The cost of maintaining a corresponding bank alone is phenomenal. So I'm not saying that is driving the interest rates, but I'm saying that banks have costs that they are also looking and trying to manage and trying to do their best to manage. But simply speaking, the interest rate should affect the risk. Now, they have a lot of institutions out there who are prepared to offer different interest rates. And what you're finding now is that the loyalty people used to have to a particular institution, that hardly exists anymore. So yes, the interest rates are going to be, and especially for things like credit cards and higher purchase and so on. And you're quite right. The spoilage or the delinquency on the asset being bought and sold is quite high in certain areas, and the losses associated with misuse and scamming and so on in some of the services are quite high.
So Peter has to pay for Paul.
In a way, that's what it is. So again, it's down to people's trying to educate themselves about the issues of interest rates and where to go and shop for if I were still where I was working, I'd tell them exactly where to come and shop. But, Yeah.
Well, this is why it's easier to get.
Go ahead.
This is why it's easier to get a consumer loan and use it for business than it is to get a business loan, right?
Yeah.
Which is what a lot of people do.
A lot of that happens,
That's what a lot of people do, right?
I can tell you at the credit union, a lot of people who, like workers who have their salary 8 to 4 jobs, and they have a little farming thing going on home, and they will come, they take a few dollars and they go and they put in their crops and thing and they reap. But sometimes that loan is not even registered in the financial institution as on agriculture. So when the figures come
Rent
out,
of a fridge or a stove.
Precisely.
you know, so-
Precisely.
Right.
Because I found the same thing in microfinance institutions, trying to figure out what the portfolio is like and the size. And they've commingled consumer and business loans. So you can't get a true sense of the size of the portfolio and the performance. So that's a serious
That's
problem.
a failure of the market, man.
Yes,
Of the
absolutely.
sector.
Absolutely.
Because essentially, people are only doing that to get around the obstacle. You know.
Yeah, it's same thing with
if
a
it was-
credit card. You
Yeah,
can't
if
get a
it was
credit card
simpler,
either.
right? If it was simpler, then they wouldn't have to commingle the thing or disguise it. Let's talk about the de-risking. Help me to understand how that presents a drag on the movement of money and the issuance of loans, and also bringing people into the banking sector. Period. How is it excluding people from becoming part of the bank? The banking sector, having a bank account.
well,
I don't know which one of you wants to take that.
Well, it's certainly well, the risking means that if you have to adhere to certain AML CFT regulations, and as Lennox mentioned, I guess starting back in 2010 or so, there was a move afoot to de-risk certain institutions. A lot of banks in the Caribbean started losing their corresponding banking relationships in the US and Europe due to KYC, know your customer, and KYCC, know your customer's customer regulations. So that automatically meant the banks became much more stringent. Not only did they have to search around and find new corresponding banking relationships which are more expensive, but they also became more scrupulous around who they would extend a loan to. So it would automatically exclude a lot of the small guys, the vendors, the mom and pop shops and so on, who didn't have very good books to begin with, right? So in terms of financial inclusion, what you saw happening was financial exclusion. Added to that, a number of banks, I'm thinking of Nova Scotia in particular, did assessments in the Caribbean and decided that the time had come to pull out from the region because it was too expensive to service.
Just
these
wasn't
very small
profitable for them
countries.
anymore.
Exactly, service
Right.
these small countries. So they pulled out of a lot of the small islands in Bahamas. They pulled out of Turks and Caicos, in basically, and so that again meant that you were excluding a whole host of people who now had no access to banking.
Tony, sorry.
No, go ahead, Lennox.
Tony,
Yes, Lennox.
I can give you some real life issues and hardship that cause here, because as the correspondent banks in the US and Canada and UK and wherever they are, as they put pressure on our banks here to, as Winsome said, to not just know your customer, but know your customer's customer. The banks in St. Vincent not only were under the threat, and some of them lost the correspondent banking, but the cost to keep what they had rose. So when the bank was asked to take a credit union, they de-risked all the credit unions, the cooperative bank, the building and loan societies, certain other individual. They say to you, we know you as a credit union. We know our customer called Geku. We don't know our customer's customer.
Right. So they don't know your customers.
What that meant immediately is that we cannot, on behalf of our customer, go and, so if a Geku member borrowed a loan to send some money for the children's school fees in Canada, before we could have gone and sent off the money for them. Now we have to give them the money, and they have to go to a bank that they have an account to send that money off. So the credit unions were not allowed to do any business in foreign exchange. So we couldn't write a draft, we couldn't accept a draft from overseas, and just think about the impact that would have in terms of people in the diaspora saving with us, but more than saving with us, paying loans. What that further exacerbated is a situation where we had to now go and deal with the ever-increasing competition from the fintech companies. The fintech companies rose in the Caribbean, money transmission methodologies, electronic purse, digital transfers, and so on. That rose. And the banks, in a lot of cases, were playing catch up with the fintech companies as well.
Yeah, but Lennox, I mean, and maybe this sort of disruption is required, because at the end of the day, the customer who is excluded, the people who are excluded, are creating a drag on economic expansion and development, and we can't wait on the banks.
No, I am.
And certainly the fintech companies have spotted opportunities.
Right.
But I'm 100% in agreement with you, right? But I'm just saying, out of the de-risking,
right,
came this speed.
Yeah, but
catch up.
But to some extent,
Yes,
the credit unions were seen as the weakest link in the process. You know, in fact, in Jamaica, they just tabled and passed a microcredit act to regulate the sector. And the sector certainly is of the opinion that the reason why the act was passed, one of the major reasons, is because the sector is seen as the weakest link in the whole risking scenario. And Jamaica doesn't want to be blacklisted, so they want to get their act together.
And in Jamaica, the credit union sector is now regulated by the Ministry of Finance.
The central bank.
The central bank.
The central bank, yes. But the thing is, just to say, just to go back to the whole issue of fintechs rising up and, you know, filling the void, I think that's interesting. It's a good trend in terms of a financial inclusion kind of play. But just to say that financial education and digital financial education is critical in that scenario, so that, you know, clients are understanding how the system works. They understand privacy. They understand the need to protect their information. A whole suite of things.
And regulation.
And regulations. A whole series of things comes with that. So it's not a panacea. It needs to have also the financial education and the other legislation and other things that will not only protect the clients themselves, but protect the system as a whole, this financial system as a whole.
Certainly agree with the fact that you need to get in there and stabilize it before it becomes a beast that in itself introduces certain solutions but creates other problems down the road. And we certainly have to look at that. One of the things that come to mind, and I'm going to address this to Carmen. A fintech solution provider gives me a digital wallet. I'm a vendor of some sort, and customers come to me and they use their platform, and so I have money sitting with them. I have done, $1,000 sales for the day. It's sitting with them. Okay, multiply that by 300. They've got $300,000 sitting there. What guarantee do I have that these people are not going to vanish? And my money becomes stuck. I can't redeem it. Carmen, how are these things being regulated?
Right now, from my point of view, there is really no regulation, and I know that the fintechs have disrupted the market, which to me is a signal for the authorities to get ahead of them and determine, because we do have the experience of the larger countries that we can look at and we can do something with. So I do think it needs to be regulated. And I do think that the ECCB is moving in that direction. Lots of things happen under the surface that you don't quite know about, but the ECCB is quite visionary, and I think that they are moving in that direction because they themselves launched some bit of fintech with the digital cash and so on, so that there is that sort of infrastructure that is going to take place to do the regulation.
Right.
Because we certainly don't want to discourage them. I think they are a necessary player in the market, and if not the future of moving money around. And certainly don't want to discourage them. We're talking about people getting into the banking arena. We're talking about people moving from the informal sector into the formal sector. And so the more people that have some sort of an account, whether it's a digital wallet or what have you, we then have information on that person. And I take the point, Dr. Leslie, that people have to be careful what information and how the information is being shared and all of that. That education piece needs to happen. But I would not like to see this, Lennox, just take on a life of its own.
But banks can partner with fintechs.
You're going to say something, Lennox?
No, I was just going to first of all say I was going to make the point about ECCB, and I really must commend them. I mean, for the pace at which fintech is moving now, I think ECCB is doing quite well in terms of keeping up in terms of keeping tabs on what is happening for us and in offering assistance in the regulatory area. But I think too,
and the ECCB has they also have their own product in that line, their fintech product, which is Dcash.
Oh, yeah.
Dcash.
Dcash, yeah. And I have to say too that a lot of the banks which were skeptical about getting into some of these fintech products and the Bitcoin and so on, they are now well in it because they have no choice. So what we are seeing is that the technology is moving apace. As a matter of fact, fintech companies can satisfy credit union members, they can satisfy the bank customers faster than they can provide the service. So this is not something that nobody's going to sit around and allow monies to be passing and they're not making the exchange on it.
So back to the topic of the program, Winsome, how does this make lending and borrowing easier?
In terms of fintechs?
Yes. Does it really?
It does, in the sense that it's much more convenient to work with the digital wallet, do transactions and so on. But banks can also partner in the process. A number of the companies that are now in the Caribbean are partnering with banks to satisfy customers. So it can be a symbiotic relationship, I think. But the bottom line is that the more instruments you have for access to finance, the better off you are in terms of the sector. But just to say, back to Carmen's point, we need regulations as well. We can't have a wild, wild west situation with fintechs running rampant with no regulation. So I think it has to be smart regulation, so you're not stifling innovation. But at the same time, I think we need to broaden the spectrum of possibilities that we have in terms of access to finance. So I see it as a positive.
Yeah, I see it as a positive too, but not to prolong the discussion on fintechs. But just one more point I want to throw out here. It's supposedly an open market, so you get 10, 20 digital wallet providers coming into a small market like St. Vincent and the Grenadines, okay? So unless there's some kind of convergence, in other words, a common platform for me as a vendor, right? If I am taking Lennox's product, his fintech product, as the one I'm going to use, and somebody comes to me with yours, Carmen, and then another person comes to me with Winsome, do I have to mirror all of these? How is that going to play out?
Well, I think there are about 6 or 7 that I can think of right now in the Caribbean. I think one of the secrets should be interoperability, so you don't have sort of a standalone system that can't interface with other things. Right. So I think the system or systems that can do that, or the fintechs that can do that, will survive. The others probably will not, because obviously you need scale to make it. And so, if you can reach out to the diaspora and have them as clients in terms of transferring money back and forth to the region and so on. So I think, as I said, the secret to all of this is really scale And so I'm not too concerned about having a lot of competing fintechs right now. I think when the dust settles, you'll probably have one or two.
You think it will take care of itself? The market will.
The market will take care of itself.
Will level that out.
Provided you have consumers are educated in terms of what they're getting into and the different features of the various programs and initiatives.
And certainly a good regulatory framework as well. Yes,
precisely.
That's the exact point I was going to make, because regulators have to make sure that they don't get left behind. Mm-hmm. In many cases, there's evidence to suggest that some are being left behind. So we need regulators to be as savvy as everything that is happening out there. They need to get all the training like everybody else, and that's the only way we'll have well-considered enabling legislation, because this fintech business here is big business.
And it's here to stay.
And it's here to stay.
Yes, it's a new wave. Well, I have to tell you that we're coming to the closing moments of the program. I have a comment from Santon Gomez, and they're saying it's a good program and they want your contact information. I suppose they want to reach out. Very good program. Would need some contact information for the presenters. So I suppose they want to. That person wants to reach out and engage you a bit further. I want to start recapping, and I'm going to just go down. Start with you, Dr. Leslie. We've looked at several points on the whole aspect of access to finance and finance education. So I just want you to in summary, tell the viewers, tell the followers what you see are the main areas of focus and how we are going to improve the opportunities for people in the MSME sector, improve the opportunities for them accessing finance.
Well, first of all, I think education is important. Education both for the entrepreneurs themselves around doing business, financial management, the various financial products, what's available and so on, and what their responsibilities are as clients to these various organizations. Secondly, I think we need to seriously look at broadening the range of products available beyond just commercial bank lending. And here I'm thinking specifically what we talked about, the purchase order financing, factoring, equity investment or equity financing. I think those things are critical. So we move beyond just grants and loans in the region. Thirdly, I think we have to look at training at all levels for all the stakeholders in the region, I think, or in the ecosystem rather. I think Lennox and Camille mentioned various stakeholders. I think those three things I would say are critical. And then finally, we should take a very holistic approach to the ecosystem for access to finance and make sure there's collaboration between the key stakeholders, between business support organizations, banks, entrepreneurs, and private sector organizations.
Carmen, I think I'm not sure if my internet fell out there, but I'm asking, what would you want to leave us with your final thoughts? Yes, we have challenges, and I'm really asking the viewers to bear with us. I got the end of what Dr. Leslie was saying, and I'm asking you, what would you want to leave as your final thoughts? We're 2 minutes away from so unfortunately, I have to give you 1 minute.
Okay, so to me, yes. Okay, so I just want to say that the granting of guarantees is just step one in a plan for the member governments to sort of alleviate the burden of access to finance on the MSMEs, also capacity building and training at the level of the MSMEs and at the level of the banking sector. So those are the things that we do that would do some small part, but a beginning to alleviating the pressures.
Thank you. And Lennox, in the last 30 seconds.
I just want to adopt everything that Winsome and Carmen said and take them as my own, and to say that we really need to focus on the stakeholder education. I think we ought to have this regional approach to developing a plan, considering all the risk management areas, and be able to implement something, not to be duplicating straight across the Caribbean, and to pay careful attention to the assessment of the needs for the micro sector, the development and objective to achieve those needs, select proper methodologies, and have a good process of evaluating the effectiveness within the MSMEs.
So I want to thank Dr. Winsome Leslie, Carmen Gomez-Trigg, and Lennox Bowman for being part of this panel. I have been following the comments online, and they're all favorable. The people WhatsApping me as well, and they're quite enlightened by your contributions. So thank you very much for being part of Let's Get Down to Business. Thank you.
Thank you.
Thank you so much.
Thank you.
Until our next program, have a good evening.
Isn't it good to know that no matter where you are, you're covered? Covered by a company owned by Vincentions that understands your unique insurance needs. At Metrosint General Insurance Company, we've invested 50 years of service to guarantee that you have the peace of mind that you deserve. When it comes to motor vehicle, property, employer's liability, business insurance, and much more, we've got you covered. Our professional and friendly staff understands your needs and ensures you understand your options. Metrosint General Insurance Company.